against Julian Sadati, California attorney, whom the SEC previously charged in her role in a fraudulent scheme to sell unregistered securities to the public. You can't do that, lady, and I know you knew it. While in the original complaint happened on the 20th. So yeah, I'm not even going to get in the weeds of this story because it's probably a story on its own, but very interesting that Mr. Real Estate, Mr. Jay Morrison, the fund manager, hired an attorney to help him with the SEC filings, and this attorney got slapped with a fine from the SEC for a fraud scheme.
As you know, the sale of many assets in the Tulsa Real Estate Fund have occurred. Brother Julian Gordon gave some information about this in this video.
What's up, y'all? What's up, y'all? It's Julian Gordon here, and I am at the Black House.
Alrighty, pause. He's at the Black House. This is the biggest quote unquote investment that Jay Morrison made with this Tulsa Real Estate Fund. It's like a over $3.5 million purchase. If you remember / recall, at the beginning, I did the little tourism video.
Are you looking for the littest Atlanta experience this summer? Then you have to visit the most historical Atlanta neighborhood. With hood classics like American Deli and Kroger's with an S, Old National is the place to go. Looking for authentic Chinese food? Then you have to stop by the China Cafe, where they can guarantee you that their prices haven't changed since the 80s. Old National is the perfect place to get your car stolen for the authentic Atlanta experience. But don't worry, if you need a ride, Marty Air will be right there to pick you up.
Marty Air.
Are you hungry as Then head over to the Old National Commons, where you can get hibachi, pasta, wings, and Kool-Aid. Child. Anyways, Old National has premier shopping centers like the Old National Discount Mall, where you can buy everything from clothes, shoes, Jordans, where the Jumpman has a BBL, actual BBLs, gold teeth, and glasses. We even got to meet the mayor of Old National, and I think he represents it well. Yeah.
AKA the Black House, which is where this Julian guy's reporting from. And this is the Old National Discount Market, which is roughly 10 to 12 minutes away in Southwest Atlanta. All right, we're in the southwest side of Atlanta, just so you know where this area is. This guy, Jay Morrison, the fund manager of the Tulsa Real Estate Fund, purchased his crown jewel, which was a $3.5 million property down in Southwest Atlanta near Old Nat Al. Being nosy in the comments, but let's check out Oshay's video right quick. See what the big stink is about this. I couldn't believe I didn't know anything about this fund, any of this stuff before Jason shot this video over.
You brothers and sisters know I have been dealing with Dr. Boyce Watkins and brother, I don't even want to call this brother, scammer Jay Morrison. He's no brother to our people, using the money from the legendary African-American community to buy more struggle apartments and homes for himself, taking care of his wife and doing all other things except working. Now he's trying to be a preacher. I mean, anything that can happen bad happens in Atlanta, all right? Which is one of the reasons why I don't want to come out there long term, because, you know, I know there's some thick stuff out there and I'll be tricking on the chicken wings, the strip club. So I don't really want to come out there and trick it off. But people like Jay Morrison live in Atlanta. And it's sad how this nigga, and I'm talking to you, you Mr. Dope Dealer, scammer, never worked a day in your life, liar, anti-business attitude type. What you did to the black community, man, it's a shame. Other groups would do worse.
Okay, he seemed pretty hot, and he kind of went in on your boy right then. I had no idea why he was doing that, And then when I start looking up some things, I get it and I understand it. We'll see them as well. All right. So let's take a quick look at what a real estate fund is and what it does, because this is what Jay Morrison set up for everyone. And this is what Dr. Boyce Watkins pushed to us all. All right. So this is by James Moore. This is a advisor firm. Let me pull this, make sure y'all seeing it. All right. This is from James Moore, an advisement firm. They originally published this article regarding real estate funds on February 21st, 2023, and they updated it just about 2 months ago. All right. It says, with the real estate boom in the recent years, plenty of investors wanted in on the action, but real estate is expensive and coming up with the money to invest in larger projects isn't realistic for most people. That's why starting a real estate fund can be a great next step if you already have experience with single asset deals. What is a real estate fund? A real estate fund is an investment vehicle that pools, remember I was saying pooled investment tools, pulls money from multiple investors. The fund buys an asset or a portfolio of assets that the investor may not be able to purchase themselves. The real estate fund can take a variety of forms, but are generally a LLC, the Tulsa one is a LLC, or limited partnerships, LPs. The purchases are commonly may include commercial buildings, apartments, and shopping centers. The goal of a real estate fund is to generate income through rent and property appreciation, which is distributed to the investors. Okay. All right. So we got a quick overview of what a real estate fund is and what it's supposed to do. So now that we know it. So it's a tool, it's an investment tool where people can pool their money together, purchase real estate that they couldn't normally purchase themselves, and then divvy out the profits, whether it be from rent or appreciation for flips, things of that nature. That's what's supposed to happen. Sounds good. So let's see how Jay put together the Tulsa Real Estate Fund. Let's see how he went about gathering investors. All right, let's check this out. This is actually the site. Get out of here. I want to take action now. This is the site to the Tulsa Real Estate Fund. Go over here, see me for a second. No, let's make that big. I want you guys to see that. Tulsa Real Estate Fund. It's the People's Fund. All right. Purpose-built fund with a double bottom line. That sounds good. All right, let's check this out. Now, these are the crowdfunding numbers. This is what he was able to raise for this fund. And we're going to see, I think the first year he raised about $7 million. And then I think the next year he raised about another $4 million. And how was he able to raise this money?
I'm black, y'all, and I'm black, y'all, and I'm blacker than black, and I'm black, y'all, and I'm black, y'all, and I'm black, y'all, and I'm blacker than black, and I'm black, y'all. I'm blickety black, blacker than black, I'm blacker than black, yo, because I'm black and I'm back.
He was able to raise this money, as you can see, basically from the website, this picture on the website. He was able to raise this money by playing on the word Tulsa and on the word black.
I'm black, y'all, and I'm black, y'all, and I'm blacker than black, and I'm black, y'all, and I'm black, y'all, and I'm black, y'all, and I'm blacker than black, and I'm black, y'all. I'm blickety black, blacker than black, I'm blacker than black, yo, because I'm black and I'm back.
And pretty much knowing that there wasn't going to be too much due diligence in this fund. And all of these things sounded very good. We got to strengthen Black institutions. I call upon you to take the money out of the banks downtown. We begin the process of building a greater economic base. And we would if it wasn't for something like this. And this fund was created in around 2018 or so. And it's very convenient that this Tulsa fund was originated around the time when there was this big awareness about Juneteenth and Tulsa, Oklahoma, and the whole Black Wall Street. Around 2017, 2018, I know I had gone 40 years and not heard anything about Juneteenth, Tulsa, Oklahoma, and all of that stuff. And then all of a sudden, in that time period, it was in the news cycles a lot. And it almost seems like the one smart thing, it would have been really smart if he bought good properties and made money with this fund. But it was like the one smart thing Jay did is he jumped and capitalized on that. Yo, I wanted to focus on the initial correspondence from the SEC to Jay when he on his initial filing or application to get his fund registered with the SEC. That's what I want to take a look at. Let's look at that right quick. All right, so it's going to be this bottom upload right here. It says SEC generated letter. This is the first time that they responded to Jay after he submitted. This is Jay's submission to the SEC on the 2nd of May in 2017. And then on the 26th of May, 2017, the SEC has reviewed all his submission, and then they sent the following letter back. All right. In a nutshell, this letter right here is a deficiency letter. Is them, and again, this is not unusual. Typically, I mean, you gotta understand these are crazy big government agencies with a lot of regulations and things that have to be adhered to before you can properly register securities and funds. So to have a couple of deficiencies is no big deal. What is interesting is Jay has 4 pages of them. Jay has 4 pages of deficiencies in his initial submission to the SEC. The fund manager, the guy managing the fund. Anyway, let's take a look. I'm not going to go through this whole thing. It was just a couple of them I wanted to look at. All right, I wanted to look at number one. Number one, it says, we note that you are a real estate limited liability company and that you have not yet identified any properties to acquire with the proceeds from the offering. So meaning that all of this money that you've crowdfunded, and then that we're going to turn this into a fund and have more people invest in this real estate fund, you've identified or targeted no real estate in your real estate fund. So they said, as a result, your offering appears to constitute a blind pool offering. So then that means you have to disclose that, meaning that, yeah, it's a real estate fund, but we haven't really targeted any real estate. So just like give us the money and we'll figure that stuff out later, which you can do. But the SEC is saying your people need to know that. All right. So that was one deficiency. For some reason, I wanted to check out deficiency number 4. This was something that we know that your disclosure on the cover page offering circular, that the Class A interests are what you're buying when you buy funds. So with stocks you're buying, you purchase shares. In these funds, you're buying interest. So interest shall bear a cumulative preferred return of 8% on invested capital. Since you currently do not have any assets and an operating history, please remove it from the disclosure regarding your 8% preferred return. Dude, they're like, you can't say that. You don't have the assets in there yet. You don't have any properties identified. You don't have a track record on any. So you can't say that. All right. I had number 5 on here. What do they do at number 5? All right. Cover page disclosure provides that potential investor can start funding their investment account with as little as $50. But their funds won't be invested, and it will not become a member until the individual account has a minimum of $500. Again, they're like, you got to disclose that. You can't say that you can start it with $50, knowing you're not going to do anything with it until it's $500. So another deficiency he's got on here. What was 12? It says. Something else he put on his disclosure. He being Jay, the the fund manager. We note that your disclosure that the Tulsa Real Estate Fund is a government-regulated $50 million fund. We note that you are seeking to raise this amount, but you have not done so yet. And it is unclear how this is a government-regulated fund at $50 million when you have not raised $50 million yet. You have 14. So it's like all of these little slick sales things that he's used to doing when he's talking in the streets and on camera and all of this stuff. He tried to register this fund the same way with the SEC, and the SEC's like, no. And that's why in that video a little while ago, he was saying, it's my fiduciary responsibility to, to disclose that, there may be, it's your responsibility now. And you're telling it because, of course, the SEC told you had to. At first, you weren't going to say anything about it. Actually, here I was looking at here we are. Risk factors. All right. This is where I wanted to be at, here in the risk factors. As of July 31st, 2018, we have a net loss of almost, let's call it $185,000. As a result of our startup operations, we have generated very little revenue. Will accumulate deficits due to the organizational and startup activities, business plan development, and professional fees since we organized. There is nothing at this time which to base an assumption of our business operations will prove to be successful, or that it will be, or that there will ever be, or that it will ever be able to operate profitably. Let's look at this again. There is nothing at this time on which to base an assumption that our business operations will prove to be successful, or that we will be able to operate profitably. There's nothing at this time to base this assumption. Nothing. Okay. We already know that there's not any targeted property at the time when they set this fund up. Our future operating results will depend on many factors, including the ability to raise adequate working capital, availability of properties for purchase, and a level of competition and availability to attract and maintain key management employees. As you can see, this perspective is a hefty document, but as you can see, it contains a lot of information that upon Jay's initial filing, that he didn't want to disclose at first, like initially with the $50 thing, and not saying that he had to have the full, $500 before you actually had, before you actually were participating in the fund. Actually mentioning that to date, the company had raised $7.5 million. The company was looking to raise a total of 50. So that's why they were they're hoping to raise an additional $42,000. But originally, Jay wanted to disclose that they were a government-backed $50 million fund. That was his aspiration, but it wasn't true. I hope I did get that screen thing straight now. So why did I bring those things up? I brought them up because it's tools that anybody can go use and look at. Yes, some of the stuff is quite strenuous to look at, but that's why you have you have advisors, actual financial advisors that even smaller on the phone, actual advisors that are in the particular sector that they're trying to operate in. And this is why I don't have a lot of venom for Dr. Boyce Watkins. I just wish he had not tried to shame and deflect and lash out at people when they had questions.
Okay, Dr. Boyce Watkins was getting a lot of criticism for the fact that he promoted this fund. He believed this was a good investment. Why don't you all sign up? And of course, a lot of blacks in our community were in his comments like, yo, bro, this is a bad investment. Like, I lost my money. Boyce was also saying he lost his money, but this is what Boyce always referred to.
I'm going to stop for a minute because I'm getting elevated, as my wife would say. She's a therapist. Mm-hmm. And I'm gonna just tell you like this. You could take down Jay Morrison and the Tulsa Fund all day tomorrow, but you will not have done any good for the Black community.
Really?
Literally. Because you're going after the people that are making $1 million, and you're not going after the ones who made $1 billion. That's your problem.
That's deflection.
Will gang bang on each other all day long. You like the Crips and Bloods. You shoot up somebody on their grandma's house because he came on your block, but you ain't got the guts to take on the white man.
What does that have to do with the fact that people apparently asked you questions of accountability about recommending this fund? What is any of the things that you just said, any of the deflection tactics you just used? And this is before I started seeing anything that had to do with the fund. Very defensive and not addressing apparently what somebody asked him that ticked him off in the first place. But I'm gonna let him finish.
You ain't got the guts to take on the LAPD that's been terrorizing you for decades. You ain't got the guts to take on the Klan. Not one gangbanger I know of has ever shot somebody who was part of a white supremacist organization.
Cool.
So what I'm saying to you is that in business, you have the same problem. You have the same problem. You have the exact same problem. You have people that will say, look at that nigga over there. Yeah, he making money. He's rich. He's swaggy.
Or maybe they were saying, look at that dude over there. He's rich off of this fund that's not doing what the objectives of the fund was supposed to be. And before you pushed it to people, you probably should have researched it. But I'm getting ahead of myself.
I don't like that old swaggy nigga. I'm gonna go take him down. And then somehow you think you did something good for the world. You haven't done anything good for the world.
Oh, well, what the good that has been done is preventing other people from losing their money by getting suckered into invested into this fund, good sir, Mr. PhD, Mr. Doctor.
Maybe you did something good for your ego. Maybe you did something good, because you created drama. Maybe you did something good for your YouTube channel because now you're getting lots of views and making lots of money. And I
don't get lots of views, not monetized, just here to hopefully help people not make the same mistake twice. Good sir, good doctor.
I get it. It's a struggle out here, right? Whatever. But did you do anything good for the community? I don't know if you have.
Hope so.
I think we have bigger fish to fry. That's my point. I'm not going to sit here.
Dude, what's a bigger fish to fry than somebody sitting on a $14 million fund that was for the purpose of revitalizing communities and giving people a pooled investment vehicle in order to have some kind of returns on, and all you did was fleece the fund. Seriously, man, come on, dude.
And pretend. I told y'all, I'm not gonna sit here and pretend that I don't know if any mistakes were made. I'm not gonna sit here and pretend like the Tulsa Fund is the best investment I ever made. I don't know. No, I mean, in terms of ROI and money in my pocket, no, it's not. I have other assets I've invested in that have doubled or tripled in value for sure. But the reason I love the Tulsa Fund, the reason that I'm very happy that my money was put into that fund is mainly because I love the Legacy Center. I love the Legacy Center.
It's needless to say that Oshay definitely was not in the wrong with going off on Dr. Boyce Watkins on this one. Dr. Boyce basically fell into a situation where he fell in love with that fund basically just because that the word Tulsa was involved with it.
I'm black, y'all, and I'm black, y'all, and I'm blacker than black, and I'm black, y'all, and I'm black, y'all, and I'm black, y'all, and I'm blacker than black, and I'm black, y'all. I'm blickety black, blacker than black, I'm blacker than black, yo, because I'm black and I'm back.
Oh yeah, and I'm black. He fell into love with the fund because of that. If he had just taken a few an hour or so, because I found all this stuff out on a Saturday afternoon and looked at the original SEC filing, looked at the prospectus, then if he still wanted to recommend the fund, he could have told people, look, this is a very risky fund, but I like it because of X, Y, and Z. I like the naming, it being named after Tulsa. I like the Black House, all of that stuff. But if you are risk averse, do not mess with this fund.